Hi, I want to welcome the audience here and thanks for watching. My name is Jared Weiss. I'm the owner of Motion Properties, national mortgage company here in Las Vegas. To tell you a little bit about myself, I grew up in New York and I was born and raised in Queens, New York, just a couple miles from where Donald Trump lived. And I moved out to Las Vegas at 19 to go to college at UNLV and was wanting to make a lot of money. I was entrepreneurial, but I didn't have any money at the time. But as I was in college, I was bartending and started to save some money up. When I graduated UNLV, I decided to buy my first house. Uh, I saw the opportunity because in about 6 months it started to go up. That's when I said, I had that aha moment. I said to myself, I think I'm onto something. So I bought another house and another house, and after about 3 or 4 years, I had scores of homes. Some I rented, some I fixed up, some I flipped. And then in about 2004, there was the craziness of the market, and houses that were being bought for 200,000 in a matter of a year would double to 400,000, and it was like the stock market but for houses. I decided at that point in late '04, I've had enough. I think it's time. So I decided to sell all my homes. Uh, didn't buy any homes from '05 to '07. 2008, when we were at the bottom, I decided to get back in and started purchasing homes at the auction. Bought 50 the first year, then the next year 150, 500, 700, and so on. And to this date, I've flipped approximately 3,500 homes. I think this series will benefit a lot of people. I know there's so many people out there that want to buy, invest in real estate, and they're not sure what the time to do it is. Should they take advantage of this opportunity? Is it going up the market? Is it going down the market? And I think with some of the tools I'm going to give you, I think you're going to learn and get a lot of ideas on when, where, and why to start purchasing real estate here in Las Vegas, Nevada. Well, I've bought so many properties. I have so many business networking relationships in the city between realtors, title companies, mortgage companies. I used to buy at the auction. So after buying thousands of homes, I get a lot of people calling me because I'm a cash buyer and I can close quickly. Also, the realtors in town know that if something falls out and they need me to basically come in, save them, and close the deal quickly, I can do that as well. And then there's people out there that go to some of these seminars that some of you out there may have heard of, and they learn how to buy and tie up properties with no money. And they call me, they tie up the properties, and then they don't have the funds to purchase it. So they get a fee for tying it up, and then they bring it to me and I buy those properties. So there's no shortage of people out there that are calling me to give me these opportunities to buy these. Well, we're in an extremely interesting place in the market right now. As most of you know, I'm sure that the run-up in houses from 2011 to now, the market is approximately 80% back to where it was at the peak in, let's say, 2006. Um, a lot of people out there feel, from economists, realtors, investors, real estate gurus, are speaking out about how there's this bubble out there and real estate prices are going up too fast and it's going to be 2006 all over again. And all the forecasts were that 2017 was going to be just very little growth, a 2 or 3% gain for the whole year. Well, I'm here to tell you the opposite is going on. And matter of fact, what's going on now is extremely reminiscent of the way it was in 2003, 2004, and 2005. So why is it reminiscent of the 2003, 4, and 5 period? It's reminiscent on the way the market's going up, how fast it went up. But it's not reminiscent on why it's not going to be a bubble and why it's going to go down right away. And I'll explain to you why. Number one, there's two different parts of the real estate market here in Las Vegas. Number one, there's a $250,000 and over market, okay? And then there's an under $250,000 market. The over $250,000 market is still climbing, at a steady rate, a few percentage points this year. The under $250,000 mark is a whole different story. I'll give you an example. Over the last 2 years, myself and a handful of investors in the city have been buying up all the properties under $200,000. And they have gone up, and the floor now in the whole city is $200,000. We bought up all those properties, either are renting them out, we fixed and flipped them. The $200,000 point and $250,000 point is extremely important for this reason. Because land prices are so high, construction is so high, the new builds of homes in the valley all start over $200,000. So when you buy homes at $80,000, $100,000, $125,000, $150,000, there'll never be any competition when you sell your properties under $200,000. So it's really just those properties, since they can never build again for that price point. What's also great about the $200,000 point is interest rates. We have still a 4.25% current interest rate right now. And at $200,000, it's an affordable payment for, let's say, an average worker, a casino worker, a blue collar worker, anyone making between $50,000 and $75,000 a year, which are the majority of your first time home buyers. So I think affordability is extremely important right now. Between the 4.25% interest rates and the available properties that are left under $200,000, it's equal to what rent is going for right now. Let me give you an example. On a $200,000 home right now, you would have a current mortgage of approximately $1,250. The current rental rate on a house for that price point is about $1,200. When rent and mortgages are about the same, well, people rather own. So what happens is it creates a lot of purchasers to buy these homes. So there's a vacuum, so to speak, of all those homes and properties under $200,000 to be rapidly bought up. And that's what we're going through right now. So with all the experts out there thinking that there's this bubble going to happen and that the market's going to drop and that President Trump came in and there's going to be uncertainty and interest rates are rising, I want to tell you how I disagree, and I think the dramatization of that bubble are really unwarranted. Let me give you an example. If you compare what happened 10 years ago to now, there's some substantial differences, such as back in '06, there were different lending criteria. The banks were getting extremely greedy and they were giving loans to anybody. So what happened was anyone, even if you didn't have a job, could go out, buy a home, 2 homes, 3 homes, and get investment properties, and they would go up in value and everyone tried to start making money. And some of them did. The problem was when they couldn't afford to pay the bills, when the market stopped, all the houses got foreclosed on. And with the adjustable rate loans and interest rates so high, so they'd be on an adjustable rate loan at a fixed interest rate. After 2 or 3 years, it would go up. What happened is Las Vegas really went underwater, and 60% of all the properties in the city were foreclosed on. And as you may know, Las Vegas was ground zero for the foreclosure market. We were hit the hardest, us, parts of California, Phoenix, Miami, Atlanta, were really ground zero for what happened in the real estate market back then. Now, the differences are a lot different than they were then. One, because lending has changed immensely. They've tightened up the lending standards, and interest rates, where they were at 6 and 7% back then, have dipped to 3.5% to the current rate of 4.25% now. So the affordability at that interest rate creates new buyers. Also, the fact that they're not adjustable rate loans and they're for 30-year fixed keeps the payments locked in for 30 years. With the few available properties that are left under $200,000, when your rent payment and your mortgage payment are about the same, up to $200,000, that creates a frenzy of buyers because, like I said before, we'll never see those prices again.
All right, go.
I believe right now, one of the last opportunities for anyone out there that wants to make money, the last properties that are left under the $200,000 mark are the condominiums in Las Vegas. When myself and other investors were buying up all the homes and to fix, flip, rent, basically the market went up over the last 3 years, and all the homes that were under 200,000, the floor is back to $200,000 for homes. So where the market tanked in '07 and '08, really where we're at is now 85% to where they were at the peak of the market. So we're just about back. We might be another year or two away from where it was 9, 10 years ago. What's the phenomenon with condominiums is, while we were buying these houses, everybody left the condominiums alone. So those condominiums that were per se $200,000 10 years ago at the peak are still being available at $70, $80, $90,000 right now. There are parts of the city, suburbs, the southwest, the northwest, Summerlin, Green Valley, that there is no house under 200,000. If you want to live in nice areas in the city, the only way you can do that is through buying condominiums. And right now, it's a free-for-all on buying these condominiums. I want to predict and let you know that over the next 12 months, the condominiums under $150,000 will go up a minimum of 25%. I think it could go as high as 30 to 35%. These condos are going in a frenzy. Investors are buying them as soon as they come on the market. It reminds me of 2006 all over again. There's an insanity frenzy. Why? Number one, when Trump got into office, interest rates started going up. The interest rates puts out there that you better get something quick because they just went from 3.5% to 4.5% and they could go higher. So that pushes the inertia for people to go out and get something. And the only thing they can get as an affordability factor in a nice area are those condominiums. So the condominiums now have gone up over the last 60 days from $70,000 to $100,000. I purchased 150 of them already, and I'm going to be purchasing another 100 more. These condominiums expect to be at $150,000 probably by the end of this year, and no more than a year from today. So many people that I speak to, seeing it going up quick. Oh, it's a bubble. Oh, it's going to burst. Oh, it's going to drop. This area of the real estate market right now, specifically to the under $200,000 mark, is the safest possible investment you can make in real estate right now. Due to the fact that the availability of what's left under $150,000 right now, and the supply and the demand factor, prices are rising very quickly. And what happens to people in the business, real estate investors, realtors, economists, what they do is you're supposed to learn from your mistakes. So 10 years ago it went straight up, so they think it could go back down. So when they see that it's going straight up, there's concern and a fear factor in there that there's a bubble that has to burst. That's not likely to happen here. This is the safest time to invest in real estate to make the absolute most money over the next 12 months. These condominiums, I'll give you an example. If you were to buy these condominiums and the average rent is $1,100, if you sold them at $150,000 today, your mortgage payment would be $1,100. And again, what that means is it's almost like a free ride up to $150,000 because they have to go there because the supply and demand factor makes it that when rent and a mortgage are equal, people rather buy, and it pushes people to be buyers. Also, another factor, we discussed before how houses are at about 85% of where the peak value was back in 2005, 2006. The condominiums are the last properties that you can still buy at 40 to 50 cents on the dollar. And even if it gets to the $150,000 point where we expect it to be within the next 12 months. That will only get us to 70% of where it was in the peak value. I think it's important in reference to buying real estate aggressively right now, knowing that the market will be going up aggressively, that I'm buying as many properties as I can. But when I think back to when I started, and I wish someone was there to teach me and to tell me on how to invest, and I didn't have that person. And I'd like to give this information out to people and help people that want to get started in real estate and are looking forward that they have the opportunity to make money and take advantage of this opportunity. And I think it'll be a wonderful experience, and they'll be very happy. Next week, we're going to dive into showing you the realization of what I'm saying about how fast the real estate market is going up. It is going so fast that you will see the differences week by week. Next week, we will dive into the numbers. We will look at the houses and condominiums left on the market, and you will see slowly how they're going away and literally dissipating in a matter of days. So we'll see you next week.